All right, good evening, guys. Ken at Tortoise Capital. This is the nightly strategy podcast for Monday night, September 27th, 2021. So let's get started here. I will start with the market health check as usual. So today was an inside day. There was a slight gap down. And an inside day and a doji that settled in the upper half of the dragon, still below the Bollinger Band mean. Rejected the PSAR today, and so this is a troublesome rolling over right here. I would say what we want to be careful of is that we're watching, two lower highs. So after that nice run up, this now feels like it's potentially this, and it is failing below the Bollinger Band mean. So if it comes out of the dragon, then it's a downside to the RL10 would be the next move down to 436. So what I'm going to do is place a nice tight risk box around the doji open and close of today, and ready to trade that in either direction. So this has had 2 days to make a better move, and it hasn't, but it's also got rising lows, so you're getting this triangle kind of an action, and so it's likely to break hard in either direction. So I'll be ready for that as a high payoff move. We'll shift to the sectors. Oh, excuse me. So today the market was down a fraction, 0.3. Treasuries were off 0.37. Still have closed above 145. The Qs were down 0.8 for the worst of the 6 big indexes we track. The diamonds were actually in the green at 0.21. Emerging markets were up 0.65. And the best performing index today was the Russell at 1.52. So that actually feels really good. When you have all three of these, what I think of as the speculative indexes, you have SPY as the baseline of the market. And then DIA is the large cap conservative aspect of that, and that was better. And then the emerging markets are the rest of the world's most speculative assets, EEM, and that was better. And then the Russell, IWM, was the best one of all, and that's a U.S. market, but it is the speculative element of it, the small cap version of it. So all three of those are ways where people are willing to take some risk on positions, all three of those, emerging markets, diamonds, and IWM, and it's not the tech. It was not tech, and it was not treasuries. So sort of the conventional defense, and then the easy to believe in tech leaders underperform. So it's these alternate methods or alternate indexes that are in better shape. So that's the interesting anomaly. So let's take a look now at the sectors that outperform. So you have, we have Brazil. The FANGs and Bitcoin, lumber, ARC Innovation, lithium, the other lumber, the large cap blended, crypto. You have commercial real estate, moonshots, and consumer staple discretionary, I should say. Agriculture up 3/4. XLB up 0.8. Mexico up 0.93. The VIX a percent. Marijuana and Ethereum up 1 and 1.2. The S&P Biotechs, blended commodities and finance. So we talked about finance being really well postured over this weekend. So that had a pretty nice move, and that made FAS pretty nice. You got oil, clean energy, the energy sector itself, and now all of the industrials. Let me also say the best single performer, XOP oil exploration, acting once again as that leveraged energy sector and oil sector combined. So that was just a monster goodness today. So now what we want to look at is the individual companies that did really well. So look at all the industrials and the metals. Alcoa, Devon Energy, U.S. Steel, Cliff Steel, TX Steel, Tesla, the disruptor, John Deere. So it was all the metals today and the disruptors. All right, let's look at the underperformers. And there weren't that many of them today. So that is a sign of risk money moving away from the broad market and towards these other broad indexes where they're hoping to get a more focused return on speculation there. So we have Robinhood minus 0.3, consumer staples 0.45, Arc Genomics 0.51, blockchain 0.6, U.S. Tech 1%, Wheaton Precious 1.5. And then the individual companies that underperformed, disappointing in Microsoft minus 1.73. Oops, didn't mean to dotted line that. PayPal and Squarespace, the financial disruptors. Again, that's showing weakness from the setbacks in crypto from last week's news. Apple, Microsoft, and the financial disruptors. So those are the two primary favorites in tech land. The practical disruptors with good cash flow, that's Squarespace and PayPal, and then the old reliables, Apple and Microsoft, suffering. So that should give us a hint that I still think there's more room in the metals and energy, and I'll be playing it that way. But I also am aware that when they have really outperformed, they become potentially vulnerable to their own success. So when you have the S&P basically flat or losing a little bit, and then you see over the course of 1, 2, 3 days the energy sector really going well, and and oil doing even better, and then XOP, which is the oil exploration, being even better, you can see that that's like a leveraged play on oil itself. In the same way that when you see XLB, so now when you see XLB outperforming, and then you have all of the steels like Cliff, TX, U.S. Steel, Nucor, all doing better, and even Alcoa, which is peripheral metal, all of those doing better than XLB, then that tells you that there's some juice in the sharp sector plays. So you got the broad market, you have the 9 sector spiders, and then inside each of those little sectors, you find something that's good. So when the market's good and the sector is better and the individual companies are best, that's where you want to go. Now, what you got to watch out for then is that move has been so good over the last 3 days that you now have to worry about that rollover reversion to the mean. So that means you have to have that. I think you want to keep, you can only let it play around with 2/3, and you want to keep 2/3 of that money as yours. So I like to use that 1/3, 2/3 rule, is I want to keep the 2/3 of the gains. That's my money. And then I'm willing to use up to 1/3 to give it room. As this thing gets better than 3R or 5R, then I start making that 1/5 and 4/5, right? And then even 1/10 and 9/10, so that on the really big wins, I'm keeping a larger percentage of the largest wins in order to respect the gift and place value on it. All right, let's I think there was one symbol. Yeah. So this is Luke. Yeah, so this isn't bad, Luke. Yeah, I've been beating him up pretty regularly, and so he's got the range compression in yesterday's close. This was the close, and he's using the compression risk box here. That's like we call that the noise box. By which I mean, at the end of the day, when you see that thing gets almost no volume and it's just idling along like this, you'll see those Z3 lines compress into a really tight wrist box. And so what that represents is the plus or minus 3 standard deviations when nobody's pushing this thing around and it's just little robots traded it back and forth with no intention for direction. So that noise box becomes the MMRB the next day, right? So we can now say any move that is larger than that is no longer noise. It's actually starting to gain signal that people are taking a directional move once you've left that behind. And so that's what Luke has done here. He's taken that little wrist box from the open, found the low, and then buys this, and then lo and behold, gets one. Notice it holds above the VWAP. He gets the Kata 2 or Emerging Dragon. I don't mind either one you want to call that. And then takes a perfect 1-2 exit when it comes through the RLXD, and then immediately gets back on. Now this is where I'm going to coach you to put 2 positions on that thing, because you've already made 6.7. That's already an exceptional day. Take 2 of those, keep 4.7, and then take 2 and put it right back on it. And then that would give you an extra 5 today. And now he takes that noise box and says, well, when I put that on there, here it is, it's already got 1R in hand, and the thing is crushing. And the Dow is really outperforming the S&P, so he gets the second position on. A third position, and then it fails, and so it's sharp. He was willing to give this a try on a return to the VWAP. It did not materialize, and so he scratches it perfectly. And now this is one where I would have considered 2 again, because now you're holding 6.7 and 8.8, so you're already up 15.5. And if you had gotten that extra piece in here, that could have been 20. So I also think that's where I might have put 2 and then got the third position in, and then that would have been an additional 2, so this would have been 5 instead of 3. So that's not bad. And now notice, when this thing gets into the sideways quiet channel, the size of that noise box is the same as this one. So when this thing is just idling with no directional activity, that's what a 3 standard deviation risk box looks like. And so as soon as that violates, now you've got the beginning of a signal of a move right here, and he takes the Z3 breakdown and cracks another 3.1. So my friends, it does not get better than that. He's got 21R, and it, with a little bit of extra effort, that could have been 30. How much? Yeah, 30 on the Dow, on DIA. And guess what's going to work tomorrow? DIA. Now notice this is Luke also experimenting with 2. And again, he noticed this is very orderly because it has a time clock on it. Every 2 minutes is a bar, as opposed to the tick charts that he's been using on a lot of other instruments. So tick charts are very sensitive to changes in price level regardless of time. But on the big fat indexes that are very orderly and smooth, like in the Dow, that time series, 1 minute or 2 minutes, I think is perfectly reasonable, as you can see here. So we may have discovered something really, really important for Luke. So, my friend, that's as good as it gets. So Luke is preparing his research weekend paper. It's got to be due on 1 November. He's written about half of it already, and now he's got to put his little stats histogram for the next piece. And taking those 2 things together, he's going to talk about planning, preparing, executing, and assessing, and the lessons learned from his trading journal. And then he's going to show the histogram, and then he's going to give us the action plan. That's the other piece that he owes us, and that's going to be, really good guidance for new traders and intermediate traders and advanced traders. That action plan, which derives from these lessons learned and the analysis. And I'm looking for him to refine his PPEA process, and this should be great stuff. Really proud of you, Luke. You're doing a great job. Very impressive. Not bad. And same with Ken Hum. I know you're in the sound of my voice. So I've nicknamed Ken Hum the Exemplar. Somebody nicknamed me the Catalyst, and so that would make Ken H the Exemplar of what right looks like in improving your practice every day. And Luke is joining that club here. He keeps this stuff up. Ken H is going to be in a True Storytelling Foundations workshop with me and my doctoral mentor tomorrow with a handful of Army guys. What we're doing is taking a very serious look at how the principles of true storytelling allow us to create safe spaces with trusted partners where the truth can emerge about our own most important stories, and from that collaboration and crosstalk and mastermind effect, we're able to create opportunities. And then those opportunities we leverage and achieve success by applying the formula for innovation that lasts, which is purpose times action times artifacts. What you see in front of you right there is an artifact. That is a thing that is documented, that has lessons learned, and will exist for all time because it's loaded in Google. That'll be there for as long as the universe is alive, along with the testimony of trading lessons and results and a focus on basic skills. So purpose times action times artifacts has to battle the forces of inertia, culture, and status quo. And so what we're going to learn tomorrow in our little workshop is how to apply the principles of true storytelling to create the safe, trusted, truthful spaces that lead to opportunities which can then be leveraged into innovation that lasts. It's foundational material on how to create organizations that can survive and thrive in chaotic times. I'm now certified in teaching those things, so we'll be putting together a 10-lesson course on true storytelling at a very reasonable price point for folks that are interested in that as a standalone course, and then for people that are in the platinum subscription level will get that just as part of their flat rate monthly for all of the courses that I offer. That's a pretty good deal. All right. Somebody asked me the other day if I would ever be interested in bringing back the platinum discount coin, So what I have done in the past was offered a discount coin for $5,000 that would give you a lifetime 50% discount on every subscription and course that I offer, with the exception of the options and the Forex course, because those are not my courses. Those are primarily the other guys, so I can't offer that discount. But so I'm thinking about offering that one more time, because a lot of folks that are long-term students, like more than a couple years, that turns out to be a pretty good deal. So I'm taking that under advisement. I'll make a decision in a couple weeks. If you're interested in that, maybe send me a note and persuade me that that's something you want to do. All right. All right. Let's get to the reports. Oh boy. All right. All right. We are still in bullish volatile conditions. We are marginally in the middle here, in neutral land between overbought, oversold. Only the long term is overbought. So this is the sign of a weakening market. We are still at exaggerated price levels here on the risk Z, or the volatility levels. It's still recommending risk off. I can be persuaded to get into the swing trades here, but I'm really sensitive about taking only the best signals and being ready to stop and reverse if the price indicates it. So I got no belief in them. I just trade them. I don't believe them, but I do trade them. This would be a natural place, if this is where the market is rolling over, a natural place for it to get weakness. And then just notice these descending highs in the volatility. That's a bad sign for the market. And then a low and a lower low. If this rolls over in the volatility, this could get bad in a hurry. No channelings or overreactions. When you're that close to the 10-day high, you wouldn't expect to see that. JP Morgan, McDonald's, IBM, Diamonds, and Verizon in the min pains. Handful of dojis and channelings and overreactions today. 15DD and United Health. Plenty of auto framers still available. And because it was an inside day, there were no breakouts on the NDXs today. In the ETF tactical, same thing. Handful of dojis, handful of really high quality auto framers, very few patterns to choose from here in the middle. And really, it was metals and mining, energy, finance today. It was not tech, and it was not the broad large cap. So that's the way to continue to play this. A narrow market, actually. Lots of good auto framers to choose from. Look, there's FedEx at 9-1 in the auto framer. Treasuries and Asia less Japan 4.5-1. Europe at 3.1-1. Microsoft and Coke, I think you got to love that at 2.4-1. If ever a buy on dip opportunity in Microsoft, it's shaping up like that now. We'll go right to the multi-time frame NDX. You can see the broad non-tech winners today. The only tech that was in there really was IBM, but otherwise it was finance, staples, energy. And then in the ETFs, the big winners, there's energy, oil, energy, and XLP. There's finance, there's the small caps, and there's consumer discretionary. And then losers in the defensive plays, real estate, utilities, treasuries, and healthcare. So and even consumer staples, which is the most defensive besides utilities, the most defensive of the S&P sectors, also suffered. And then tech was not a safe haven. So we'll be interested to see if that's a buy on dip or if that's just a sign that tech is running out of steam. And meanwhile, energy, finance, and materials doing pretty well. So that's kind of the theme going into tomorrow. Okay. All right. So everything else kind of reads normal. We will get all this published and posted. And again, hat tip to Luke in the land down under. Just really, really pleased to see your excellent performance. And keep an eye on that 1 and 2 minute chart. I think you're going to love that for the big fat indexes anyway. All right. Take good care, and we shall see you tomorrow.